All right, morning all. Welcome back to Mankapait 8. Okay, so looking at the S&P 500, well, it pulled back yesterday sharply as tech-led sell-off as investors were spooked by fears of an AI bubble, right? So I think investors' anxiety over the lofty valuation in the big tech stocks like those Nvidia and whatnot, right? Resurface, leading to a heavy profit taking in the market leaders. Also painting a shaky picture for the US economy, particularly in the light of lack of economic report as a result of the ongoing government shutdown, right? So looking at the chart right now, the index went lower to test the immediate support at 6,700 point level, which also testing this uptrend line uptrend line. So yeah, looking at the China A50 index futures, well, it surged on Thursday's session. I think driven by a major new government policy mandating that any new data, new data center project receiving state funds must only use those domestic made AI chips. So I think this policy is one of the China's most aggressive one, which I think to step towards the tech self-sufficient, right? And also, I think as such, this might be a potential mover for the market, right, to ride on the rally even more. And I think with that, I would suggest to take a look at 2823 ETF as traders might collect some gains from here. So for the WTI crude oil futures, well, it fell on third session, right? So as the market continued to react from the previous sessions, unexpected build-up in the US inventories, which I think confirmed the supply glut, right? Also, this bearish sentiment was strongly reinforced on Thursday by Saudi, which also announced cutting its official selling prices for the Asian buyers. So for now, we still keep our short position, anticipating a formation of a lower market structure towards the $57 level. Well, coming back to Malaysia, well, for the FKLI, well, it closed a bit higher, slightly higher, as the market was in wait-and-see mode, right? After the BNM decided to maintain the OPR rate. Well, also, as widely expected, the BNM held the interest rate steady at 275, citing that the better than expected third quarter growth in stable inflation. So the market's slight, the market is still in its consolidation mode, and particularly in those banking stocks. So yeah, looking at in terms of the day-to-day performance for the sector, yeah, majority of the sector experienced some rebounds following the recent I would say bearish momentum, mainly taking cue from the regional peers. Right, so for the watch list, we added Gamuda and also Powell to our monitoring, I would say monitoring highlights as we saw some momentum to it. Okay, so yeah, for today, I would like to reiterate back on this TMK. So recently we have a report on this as well, and one thing that really caught my attention is that the counter, right, is now forming a potential continuation pattern of bullish triangle, right? A bullish triangle. So this is a continuation pattern lah. So if today, it's either today or next week, right? We see the price breach the above, breach above this pattern. Yeah, you know what to do, right? So but don't worry, we'll keep you guys updated on this TMK. And I think for now we are looking at the Horng at 40 cent. Well, if this resistance is breached, continue to look higher at 1 ringgit and 50 cent resistance level. All right, so moving to our uh, Malaysia trading stock. So we have Gamuda today, right? So the stock has breakout above the 5 ringgit and 10 cent level on a strong, I would say strong volume. So with that, we expect that the momentum to remain bullish and the stock able to climb further to test the next resistance at 5 ringgit and 35 cent level, followed by 5 ringgit and 50 cent level. Also, if the stock clear the 4 ringgit and 95 cent support, this could dampen our bullish view, right? And next, we have Powerwell Holdings, right? So the stock is experiencing a breakout as well, above this 54 cent level. So if the stock remains bullish, we are expecting at the price to reach the 58 resistance level in the coming sessions ahead, with another high volume. So second resistance now seen at 62 cent level. And also keep an eye on the 50 cent level for any attempt of reversal. And lastly, for the FCPO, well, it rebounded, I would say, quite significantly on yesterday, snapping it losing streak as the market saw bargain hunting after price hit the 12-week low earlier this week, right? So I mean, the rally was supported by a stronger soybean oil prices as well. However, this rebound was kept by the strengthening of our our Malaysia ringgit, which hit the 1-year high. And also, for your information, it makes our palm oil more expensive for foreign buyers. Okay, so we still hold our short position unchanged unless it trended up and cross above our stop loss level at 4,400 resistance, which is yeah, our stop loss as well. Yeah, so that's all I have for today, and I pass the floor to Aidil. Thank you, everyone, and happy trading.
Hello. Hi, morning everyone. So for Sentral REIT's result came in yesterday. It was largely broadly within our expectation. So so revenue came in at 142 million, down 1.3% year on year. This was mainly due to a lower occupancy at Menara Shell following the exit of a key tenant last year. So on top of that, there was a one-off maintenance repair in third quarter that pushed up the operating expenses, resulting in a 2.3% year-on-year decline. Despite the top-line softness, core net profit was pretty okay at 59 million, down just 2.4% year-on-year. And this figure was within our expectations, accounting for 72% of our forecast and 73% of consensus estimate. There was no distribution per unit declared in third quarter, given their semi-annual payout cycle. On the capital front, gearing remained stable at 45%, and interest expense fell 2.1% year on year, partly due to a previously executed interest rate swap. Occupancy overall also showed a slow but positive traction, improving to 86% in third quarter, up from 85% in second quarter. And looking ahead, we expect a slight improvement in performance supported by a stable occupancy and full quarter contribution from 2 new tenants at Menara Shell. The lease expiry profile has improved as well. Only 40% of the total NLA is now up for renewal, down 21% from previous quarter. Given the REIT's tenant mix, which includes long-term MNCs like DHL and Shell, we are cautiously optimistic on the renewal outcomes, and management also continues to guide for a low to mid single-digit rental revisions. A major term catalyst in the short term is the disposal of Wisma Sentral E9, also known as Wisma Technim, a long vacant asset for 135 million, targeted to complete by fourth quarter 2025. This move is expected to lift overall portfolio occupancy to 94%, while also freeing up capital to pare down debt or fund new acquisitions such as the new Acroris Plaza, which are ongoing acquisition and is expected to complete by end 4Q 2025. This aligns with the management longer-term strategy on reducing reliance on office assets, which are currently more than 90%, and gradually increasing exposure to retail and other segments of REITs. Following the results, we maintain our buy call, but we've made a slight downward revision to our earnings forecast. So FY25 earnings were cut by 3%, while FY26 earnings were trimmed down by 7%. As a result, our DP is lowered to 92 cents, and this implies a FY26 yield of 8%, offering a spread around 450 bips over the 10-year government securities. Despite near-term softness, we believe FY26 could mark a turning point with visibility on catalysts from both disposal of existing vacant assets as well as the acquisition of new retail assets. I'll stop here and I'll pass to our next presenter. Thank you.
Thank you, Aidil. Let me move on to 9 months results for Pentamaster. It was a missed from the 9 months numbers. Core Patami declined about 13.8%. Year on year for revenue, 33.8% year on year for the Core Patami to 45.1 million. This is at about 60% of ours in straight forecast. I think the deviation mainly stems from slower than expected recovery in the automated test equipment segment, affected by timing delays in the automotive and electro-opticals project deliveries. Now, if you look at the margins, it compressed from 23.9% to 20.1% in the 9 months numbers, affected, of course, by lower revenue, this economy of scales, as well as a higher cost base. If we were to zoom into third quarter revenue, it was broadly stable, but we do see a sharp Q&Q contraction in the revenue for ATE segment, offset by stronger progress billing in the factory automation solutions divisions. Particular higher billings from medical, consumer, and industrial clients. Now, notably, I think the ATE segments recorded a loss before tax of 5.6 million in this quarter, particularly due to this economies of scale versus a profit of 9.3 million in second quarter of 25 and 4.3 million profit in third quarter of 24. This leads to a lower third quarter Core Patami of 14.7 million for the group, which was down 39.9% year on year and 30% Q on Q. However, management do guide of a stronger momentum build up in order book, encouraging orders for its test handler, especially in the logic and power subsegments, with conversions expected to happen more in next year. Now, the group is also investing in R&D for high value test equipment such as wafer inspections, burn-in system for co-package optics, silicon photonics, and logic testing. This should be come into commercial somewhere in the second half of 26, where we will expect to see some revenue contributions. If not, then it will be early 2027. We cut our FY25 earnings by 13%. This is after we lowered our revenue and margin assumptions. but we do keep our 26 and 27 numbers unchanged. So our target price is also unchanged at $4.25 based on unchanged 33 times FY26 PE, which is 0.5 times standard deviation of its 5-year means.